Welcome to your 2014 Benefits Open Enrollment presentation for employees of Canal Barge, Canal Terminal Company, and Illinois Marine Towing. To say the least, 2013 was a very interesting year. There are many challenges which had to be dealt with on a financial and government compliance front. As the letter you received in the mail noted, our goal was not only to address these challenges, but at the same time minimize the disruption and changes on our employees. We have always made it a priority to provide our employees with competitive pay and benefits to provide security for you and your family. This priority continues. As you know, the most costly benefit we provide for our employees is our medical plan. Being that our plan is self-funded, the cost incurred is the accumulation of every employee's utilization of the benefit, and that directly affects our bottom line as a company. For this reason, we have continued to place an increasing emphasis on the importance of wellness and making good choices on your personal health. Let's take a look at the agenda. The agenda consists of 4 main sections. We'll give an open enrollment overview, which includes healthcare reform mandates and 2014 benefit changes. We'll go over your medical plan options for 2014. We'll talk about the new prescription drug card. And then finally, we'll get into the additional benefits such as dental, vision, disability, flexible spending accounts, and the Employee Assistance Program. Note that the open enrollment period to make changes starts November 25th and runs through December 13th. Employees must enroll through the EMSS Internet portal. You can access this portal through the Canal Barge or Illinois Marine Towing website. Simply refer to the first few pages of the 2014 Employee Benefits Guide. Benefit elections can only be changed during this open enrollment period. Dependents can only be added or taken off the plan if you have a family status change, such as a marriage, divorce, birth of a child, spouse obtaining better coverage or loss of coverage with the employer, or death. Remember, flexible spending account requires you to enroll each plan year. New ID cards will also be issued this year. Remember, if you don't want to make any changes, your elections will be the same as last year. The only exception is a flexible spending account for unreimbursed medical or dependent care. You must enroll each year for that benefit. Healthcare reform has presented some required changes for 2014. Those include the elimination of pre-existing conditions, physician copays, urgent care copays, and emergency care copays will now accrue towards your out-of-pocket maximum. And then finally, coverage for complications of clinical trials is now included as part of your health plan. 2014 Benefit Changes, page 5. Now let's take a look on some of the changes that you can expect in 2014. For the first time this year, we're offering a dual option medical plan with a choice of the traditional PPO plan you're accustomed to, along with a second choice of a high deductible health plan with a health savings account. Also, we have moved pharmaceutical vendors from EHO to CVS Caremark. This has greatly improved your pharmacy prescription drug card. There's also PPO changes, such as increased out-of-pocket maximum from $2,500 to $3,000, a change in the out-of-network reimbursement from 70% to 50%. We've also changed the United Healthcare Network from PPO options to Choice Plus. Keep in mind, it's the same exact providers, but there are deeper discounts available to employees. And then finally, we have a modest increase in employee contributions this year, which can be eliminated by participating in the wellness programs. For more information, contact Human Resources or email us at benefits@canalbarge.com. Now let's take a look at this year's medical plan options. Your first option is the PPO medical option. This is the same traditional PPO plan which you have been used to over the years. The annual deductible has remained at $500 for individual and $1,500 for family in network. Out of network is $750 and $2,250. Doctor's office visits is a $30 copay. Preventive care is covered at 100% as long as you stay in the network. Inpatient hospital is subject to the deductible and coinsurance. The coinsurance is 80%. The out-of-pocket maximum has been increased this year from $2,500 to $3,000 for an individual. But remember, copays accumulate toward that out-of-pocket maximum this year. The family out-of-pocket maximum is $6,000. Emergency room, there's a copayment visit of $75. It's waived if you're admitted, and then an 80% copayment afterwards. For urgent care, there's a $50 copayment as long as you're in network. If you're out of network, the deductible and coinsurance will apply. Let's take a look at the premiums for the PPO plan. As you'll note, by tier, the employee premium per paycheck is listed as follows. Employee only, $49.50. Employee plus one is $120. Employee plus family, $172.50. However, you can significantly reduce this per paycheck amount by participating in the various incentive programs offered. For instance, if you're a tobacco user and engaged in a cessation program, or a non-tobacco user and completed the affidavit, your rates will go down as indicated. Additionally, if you've completed the HRA and biometric screening, you can receive the wellness incentive. Each one can operate on its own, and the premiums are indicated accordingly. You can combine the two, and the far right column shows what those rates would be for both non-tobacco and the wellness incentive deducted from that amount. The second option is a high-deductible health plan with a health savings account option. Since this is the first time we're offering this type of plan, we will give a deeper overview of how this type of plan works. It consists of two parts, a high-deductible health plan and a health savings account. In this case, the standalone health coverage, high deductible, is a $2,000 deductible for individual and $4,000 for family. Keep in mind the family deductible is aggregated, so the accumulation of each individual counts toward the $4,000. This is a qualified health plan. Also, preventive expenses are covered at 100% and are not subject to the deductible. Preventive prescriptions are covered at 100% and not subject to the deductible as well. Note, however, if your drug is not considered a maintenance drug by CVS/Caremark, you will pay the full discounted price until your deductible is met. All other medical services, including office visits, prescriptions, apply toward the deductible and out-of-pocket maximum at a discounted rate. The other half is the health savings account, otherwise known as a medical IRA. This account is owned by you, not the company. Contributions to a health savings account can be made by both the employer and the employee, and employee contributions are tax deductible. Earnings grow tax-free as well, and any distributions paid through this account are tax-free. Expenses are covered as long as it's an IRS Section 213D eligible expense. Remember, at the end of the year when you file your taxes, there's an additional form that has to be filled out along with your regular taxes. This form is Form 8889, and your CPA can help, or your tax advisor can help with this information. Remember, you cannot participate in a health savings account if you're Medicare eligible, age 65 plus, or covered under a non-qualified health plan. Remember, a health savings account is not a flexible spending account. This money rolls over from year to year, and it's not a use it or lose it proposition. In addition, in the event that you leave your employer, this money is portable and goes with you. Now let's talk about how a high-deductible health plan with a health savings account works. First of all, Canal Barge Company will set up checking accounts for employees through HSA Bank. This checking account will be owned by the employee. Canal Barge, Illinois Marine Towing, and Canal Terminal will contribute $500 for single coverage and $1,000 for family coverage into this checking account. Additionally, employees can set aside their own contribution from their paychecks into this checking account on a pre-tax basis. Then, when needed, employees can use the HSA debit card to pay for health-related expenses from this account. You use this debit card for only medical-related expenses, and it's used just like an ordinary debit card. As the owner of this debit account, the employee is responsible for using the card on appropriate expenses only. Let's take a look at how a claim is processed under this account. You continue to access the UnitedHealthcare Choice Option Network, the same network that consists of the PPO. Claims will be processed through UMR as they normally are. There are no co-payments for network office visits because all accumulates toward your deductible. You will pay a discounted cost for that office visit. The physician will then submit a claim as normal. The amount will be applied to your calendar year deductible and out-of-pocket maximum. There are no co-payments for prescription drugs, as the cost of these drugs goes straight toward your deductible and out-of-pocket maximum. However, maintenance and preventive medications will be paid at 100%. Examples of this are cholesterol, high blood pressure, diabetic supplies, insulins, and non-insulins. You will be responsible for the full cost of non-preventive medication, which means it applies toward the deductible and the max out-of-pocket. Claims will simply be submitted to UMR to apply toward that deductible and out-of-pocket. Remember, if you are contributing to an HSA or you have funds available from the employer in your HSA account, the available amount can be used as payment for these services. Let's take a look at the grid to show the health savings account information along with the deductible. You will note on the left-hand column that preventive care is covered at 100%. The health savings account for employee only, the employer is contributing $500. For family coverage, the employer is contributing $1,000. The deductible is a $2,000 deductible, employee only, and $4,000 aggregated family deductible. The coinsurance beyond the deductible is 80% in-network, 50% out-of-network, accumulating to a maximum out-of-pocket of $4,000 in-network or $8,000 out-of-network. The family coverage is shown accordingly. Remember, your out-of-pocket maximum, including the employer contribution, is $3,500 and $7,000 family. This is because the $4,000 is thereby reduced by $500 for the employer contribution, and the family deductible of $8,000 is reduced by the $1,000 employer contribution. Prescription drug expenses will also apply to the deductible and maximum out-of-pocket. Let's look at a couple of rules on HSA contributions. The maximum combined employer and employee amount that can be contributed annually to an HSA account in 2014 is shown below. For employee-only coverage, it's $3,300, which consists of $500 from the employer and $2,800 max from the employee. For family coverage, the maximum contribution is $6,550. The breakdown is $1,000 from the employer and then $5,550 maximum from the employee. Remember, you're not eligible to participate if you're eligible for Medicare or another health plan. The premiums for the high deductible health plan are shown below. The red column shows the per paycheck amount for employee only is $3,850, employee plus one, $99.50, employee plus family, $141 per paycheck. However, the same incentives apply for the high deductible health plan option. So, for non-tobacco users, the rates are significantly reduced. In addition, if you've completed the health risk assessment and biometric screening, they're further reduced. And then combined with both incentives, it's reduced even further. For more information, contact Human Resources or email us at benefits@canalbarge.com. This year, effective January 1st, we will change from EHO to CVS Caremark. Now, don't let the name fool you. This is a broad network of pharmacies with even greater discounts than ever before. The plan design remains at the current benefit level. New cards will be issued. Keep in mind you may have to make sure that your pharmacy has your new card on file. The advantages of this new CVS Caremark are greater savings on your prescriptions, the ability to integrate your prescription expenses toward your deductible and out-of-pocket, and finally, we've added the 90-day maintenance mail order feature, which our employees have requested for some time. Major pharmacies such as Walgreens and Walmart, as well as independent pharmacies, are included in this network. Now we're going to look at what the actual prescription drug co-payments are. Remember, these co-payments are only applied to the PPO plan, whereas on the high deductible health plan, everything accumulates toward the deductible, unless it is preventive medication or maintenance medication. First of all, a generic script of less than $40 is a $10 copay. A generic script of $40 or more is a $10 copay plus 25% of the total cost over $40. Name brand script less than $40 is a $20 copay when generic is not available. Name brand script $40 or more is a $20 copay plus 25% of the total cost over $40 when generic is not available. Specialty drugs remain at $100 copays this year. Remember, any chance you have to use generics will save you and the company money. Let's take a look at an example of a typical prescription. In this example, the cost of the prescription was $78.50 and it was a name brand. So the remaining portion, the amount over $48, is $38.50. The additional amount owed by the employee is 25% of the $38.50 or $9.62. So combining those two, the $20 copay and the $9.62 results in a $29.62 charge for the member. It's important to remember that these co-payments do not apply on the high deductible health plan and only apply for the PPO plan. For more information on the prescription drug card, contact Human Resources or email us at benefits@canalbarge.com. This last section will review all the additional benefits available with Canal Barge, Canal Terminal Company, and Illinois Marine Towing. The dental benefits for 2014 remain the same. The annual maximum is $1,500 per individual. The annual year deductible is $50 per individual, waived for preventive expenses. For orthodontia, there's a $1,500 individual maximum, and it's for only children under the age of 17. Note that a 6-month waiting period applies. For basic and preventive services, the reimbursement increases 10% per year, provided the employee utilizes the dental plan at least one time per year. In the event that the employee does not use the dental plan, they will regress to the next lower level. Major and orthodontia services are reimbursed at 50%. The dental premiums per paycheck for 2014 are as follows. For employee only, $7.50. For employee plus one, $12.50. For employee plus family, $20 per paycheck. Remember, all premiums are paid on a pre-tax basis. Now let's take a look at your vision benefits. The vision plan is provided through VSP. It includes an annual exam for a $10 copayment at any VSP provider, prescription glasses or a $25 copayment, which includes lenses every calendar year. Lenses may be for single vision, line bifocal, or line trifocal lenses. Frames are covered every other year, and there's a $130 allowance for a wide selection of frames. Contact lenses have the same $130 allowance, but is paid every calendar year. Please note that this is an employee-paid benefit. All costs are incurred 100% by the employee. No ID card is necessary for this benefit, and for inquiries or provider information or locations, you can simply contact the 1-800 number at 1-800-877-7195. The premiums for the vision plan are as follows. Employee only, $3.52. Employee plus one, $5.10. Employee plus family, $9.14 per paycheck. As with the other deductions, all premiums are pre-tax. This next benefit is the employer-paid short-term disability plan. This benefit is 100% and paid for by the employer. It's for non-work-related injuries and illnesses only. If you are injured or have an illness and cannot perform the normal duties of your job, the following criteria apply. You must be under a physician's care. Benefits are payable on the first day of an accidental injury. Benefits are payable on the 8th day of an illness. Benefits do not begin until the form is returned to your benefits administrator in Human Resources. Benefits are paid according to payroll cycle and direct deposited. Benefits are paid for up to 6 months according to the schedule shown at right. Remember, the monthly benefits amounts are based on the length of service. However, the minimum benefit amount per month is $650. The next benefit is long-term disability. This benefit is also 100% paid for by the employer. If in the event that you're out for 6 months and totally disabled from your or any occupation, you're eligible for long-term disability. Benefits under LTD are paid at 50% of your pre-disability monthly pay. You must also apply for Social Security disability benefits at the same time. Any income received from Social Security offsets your long-term disability benefits. The next benefit is your life insurance benefit. This also is 100% employer paid, and it's automatic for all employees. The benefit is a $50,000 life insurance benefit, and in the event that there's an accidental death or dismemberment, there's an additional $50,000 coverage. This benefit, again, is 100% paid for by Canal Barge. The next benefit we will review is your flexible spending accounts benefits. A flexible spending account is an account where you can set aside pre-tax dollars to pay for unreimbursed medical and dependent care expenses. First, let's look at unreimbursed medical. This account allows you to set aside up to $2,500 annually. A sample of eligible expenses are copays, deductibles, out-of-pocket maximum, prescribed over-the-counter drugs, and all Section 213 IRS Code eligible expenses. Next, the Dependent Care Flexible Spending Account enables working parents to set aside up to $5,000 annually for pre-kindergarten, daycare, before and after school expenses for children up to age 13. Elder care expenses for parents or family members who are living with you and claimed on your taxes who require round-the-clock care are also eligible. Keep in mind that elected amount that you set aside is divided by the number of pay periods in the calendar year and deducted from each pay period, then deposited into your flexible spending account. Funds in this account must be used by March 15th of the next calendar year. If the funds are not used, the IRS requires that any remaining funds over $500 will be forfeited. Remember, this is an IRS rule, not a company rule. Employees who participate in the health savings account will have a limited purpose flexible spending account. Only dental and vision non-covered benefits are eligible for reimbursement. Employees who currently participate in the FSA must use all funds by December 31st, 2013 to be eligible to participate in the health savings account. Please plan carefully when setting aside money into your flexible spending account. The final benefit we'll review today is the Employee Assistance Program, otherwise known as your EAP. This is a wonderful benefit to have. During tough times, it's good to know there's help and guidance available. It allows you confidential access to professional services for help with coping and managing work and life demands. You'll have assistance with emotional conflicts, alcohol, substance abuse, work-related issues, financial counseling, and simple legal matters. This program is available to employees and their immediate family members. Family members do not need to be enrolled in the health plan to access these services. The benefits under this program include 6 free visits when referred by the EAP using the EAP network providers. You should contact the EAP first to achieve maximum benefits. The website for the EAP is www.4eap.com. This concludes the information on the additional benefits available at Canal Barge. For more information, contact Human Resources or email us at benefits@canalbarge.com.